Welcome back. The market's holding firm. The Bank Nifty is really leading the charge now, 600 points and counting on that. And a lot of mid-cap stocks doing well. MCX is up 5%. Astral is the other one, up 4%. Page Industries, TVS Motor, just look at that move. 1,060 now on that. Again, one of the stocks where you've seen a lot of FI money chase stocks all through the last 2 months or so. And it's really been the strongest auto stock. The other stock that we're discussing now is Vinati Organics. We have Vinati Saraf Mutreja, Managing Director at Vinati Organics, joining us to discuss their business outlook. This is a space which has done well. Vinati, hi, good morning. Thanks a lot for joining us. So in terms of demand, how's that shaping up? Have you been able to increase your market share? Sorry, Vinati, we can't hear you. You'll have to unmute yourself. Yeah. No, you. Yeah,
okay, sorry.
Go ahead.
Good morning. Demand for us has been very good, especially in the last 8-9 months. Our key products, ATBS especially, has seen a surge in demand coming mostly from the oil and gas sector, which basically means the demand for high-grade ATBS has increased. Presently, there's a shortage of that product globally, and hence we are going ahead with an expansion, keeping in mind the demand perspective for the next 4 to 5 years. Similarly, even IBB, which was slow last year, has picked up, with the economy sort of opening up and all the lockdowns going away. The demand for ibuprofen is picked up compared to last year. Hence, the demand is looking good.
So you said you're going ahead with an expansion as well. I think in the butyl phenol space, you've commissioned a new unit in FY21. You were looking to ramp up utilization by FY23. Can you tell us what exactly is the kind of utilization levels that you're looking at currently, and how much will it contribute to your revenues?
So butyl phenols is presently running at about 60% utilization. That is also, part of it is going to be a captive use for our antioxidant business, which is still under commissioning, as I would say, as more or less it's ready, but it's not picked up yet. So once that picks up, sales of that pick up, the utilization in butyl phenols will also go up. The total expected revenue just from butyl phenols is about 300 crores, but the antioxidant business is supposed to add another, 700 crores. So the total of the two is about 900 odd crores.
Okay. Vinati, you've also announced a capex of 280 crores in your wholly owned subsidiary, Viral Organics. Could you tell us what is the progress on that?
Yeah, sure. So that is for 3 products mostly. MEHQ, which is a polymer inhibitor, which we also actually use for ATBS. Along with that, you get a co-product, Guacol, which is used in the pharmaceutical industry. Then the third product will be isoamylene, which is a similar process to our existing isobutylene technology. The progress is it's going strong. We expect it to be commissioned in about another year or so, maybe a little earlier. It's a greenfield site, it's a new site. So hence it'll take slightly longer than the brownfield expansion of, for example, ATBS.
Okay. Can you tell us what will the revenue mix be between ATBS and IBB? Because, there was a report by HDFC Securities where they said that the growth is now driven by a shift in the revenue mix towards the low margin business, the IBB and butyl phenol, compared to ATBS, which is a high margin business. Just trying to understand what will the revenue mix look like over the years?
Sure. See, we are going ahead with the ATBS expansion. So presently, ATBS accounts for about 50% of our revenue mix. Going ahead, given the antioxidants, the butyl phenols, the BOPL products, isoamylene, ATBS share will come down to maybe about 40%. But that is a calculated move because we want a diversified portfolio. And having said that, we expect to maintain our EBITDA margins going forward.
This entire situation in Europe, right, Vinati, what is the impact? I mean, I was reading that there's a chemical called, pardon me if I pronounce it wrong, acrylonitrile, which is where Europe is about 10% of the global capacity, and price. And you are a producer of this as well. But so there has been a lot of debate whether we, like China plus one, it'll become Europe plus one because of very high gas prices in Europe. But Europe is also a very large consumer. If there is a big slowdown, it's not just that they produce less, but they also consume less, right? And we are a large exporter. Your sense, Viniti?
Yeah, I'll give you my sense. So acrylonitrile is actually a raw material for us. We don't produce it. We buy it. We import it from US or from Asia. And actually the acrylonitrile prices have come down. They were quite high during the COVID period. So this year, 22 has been a good period for acrylonitrile pricing. And see, for us, we are sort of hedged with our raw material prices because it's all formula-based contracted pricing for us. So there's a pass-through clause, whether the raw material fluctuates upwards or downwards. Now, coming to the European demand, basically for us, our other products are not exported into Europe except for ATBS, where we are still not seeing a slowdown yet because it may be because as gas prices have gone up, the demand for oil has increased. And when demand for oil increases, ATBS consumption goes up. So I have not seen a slowdown from Europe for our products. But again, ours are very niche products with specific applications.
Okay, so you said that ATBS presently accounts for 50% of your overall revenues and you're looking to bring it down to about 40%. Can you tell us in terms of market share? I understand that you have a fairly large market share at the moment itself, global market share of more than 65%. Any targets that you have? What are you looking to grow it to?
Actually, for ATBS, we will be maintaining the market share at 70% because we are adding the new line also, and most of it is contracted. So it's based on our customers' demand. So I don't see that changing.
Okay.
Right. Sorry, you add on?
No, just wanted to understand then if you're going to, you said I think 300 crores of revenues is what you're looking at from the other business, right? From butyl phenol, that's the 300 crore revenue target that you have. Overall, what would this mean for your FY23 revenues? What kind of growth are we looking at from the separate verticals? And overall, over FY23 and 24, what would the growth be?
Yeah, see, it's very simple. FY23, we are looking at a 20% revenue growth year on year. I think FY23, we are well on track to achieve that. FY24, we will see some revenue growth also coming from the new products, not just butyl phenols, antioxidants, as well as the products from the subsidiary BOPL, as well as if the ATBS expansion is completed. So 20% growth in FY23 and then another 20% in FY24.
Okay. Viniti, just one last question. Again, on that export bit, right? So out of the total exports, Europe is about 40% plus, right?
No.
As a share?
No. Europe would be about 20% of our total exports.
I see. And got that.
The major share is USA. We export to China. We export to Southeast Asia.
Okay.
Yeah.
All right.
Yeah.
And you said that there is no real slowdown or anything. Maybe it's the niche product categories you're in, etc. So,
exactly.
So, got that.
Okay.
Thank you very much, Viniti. Appreciate you joining in, and thank you very much for answering all those questions patiently. Thanks indeed, Sonia.
Thank you.
Okay, that's Viniti Organics. But moving on to one space that has been buzzing in the last few days, Metro Brands is a stock that has been faring very well. It's up around 44% in just 6 months. And overall, it's up 80% higher this year. If you remember, the issue price of Metro Brands was 500 rupees. And look where the stock is right now, 850. Motilal Oswal has written a note on the footwear sector where they say that organized players are growing at 1.5 times the rate of the overall market. On Metro Brands specifically, they point to the consistent double-digit revenue and profit growth and have initiated a buy with a target of 1,000 rupees. To discuss demand trends and the growth picture, Nissan Joseph, the Chief Executive Officer at Metro Brands, is joining us now. Mr. Joseph, thanks a lot for joining in. The Motilal Oswal report that I was just referring to, the key thesis for growth for them is that you're adding more stores. Can you tell us what is the store expansion plan? How many stores would you add this year and next? And what would that translate into in terms of growth for you? Mr. Joseph, you're on mute. If you could just unmute yourself.
My apologies.
No,
Good morning again, Sonia.
Morning.
We had guided on our RHP to open 260 stores over the next 3 years after we went public, and we're well on track to do that. I think the growth opportunities really come from new store growth, but also the fact that we are seeing productivity increases in our existing stores, and then ASP increases that become a factor of the basket of goods being purchased, and also inflation that continues to be a part of the Indian landscape.
So you're on track with your guidance of 260 stores over the next 3 years. But can you give us a slightly more immediate target? In Q1, you opened 20 stores. How many in Q2 so far? And what is the revenue per store?
So we are looking to weight the openings of the stores to the front end of the 3 years rather than the back end of the 3 years. I think we are on track to do that without giving specific numbers as we get to the end of the quarter. But we're more than on track to do that with a little bit of weightage towards the front part of the 3 years.
Mr. Joseph, the other kind of leg of growth for you has been tie-up with third-party brands. Could you tell us what's the latest there, and how is that doing? What is that as a share of your overall earnings? What will that be, that proportion?
And so we guided and we said we do about 30% of our business from brands that don't belong proprietarily or in contractually to Metro brands. And that number is not a target that we hope to achieve as much as it is a target that we want to do to make sure that our consumers have a wonderful consumer journey in our stores. It's tracking quite well. FitFlop opened, as you know, our first store of FitFlop opened back in April, and it's tracking well. And we remain on track to open somewhere between 3 and 5 stores this year for FitFlop. Our Crocs expansion plan continues, and both those brands continue to do very well inside our Metro, Mochi, and Crocs stores. We also launched recently a Canadian brand called Bion, which is a little bit of a niche brand. It's a fun brand. So we continue that growth as we look to opportunities to please our customers in our Metro, Mochi, and Walkway stores.
Mr. Joseph, good morning. That was Prashant. Anuj this side now. I wanted to understand how's e-commerce shaping up for you, and especially with the shoes market. There's always this issue of people wanting to go to a store and check, right? But e-commerce, how's that shaping up as a channel?
So I think we've been pleased on the journey of e-commerce that over the pandemic, it became a convenience shop, which is what you want to see as opposed to be a discount-led shopping event. So consumers got used to the convenience of it. What is encouraging to see is that once the pandemic has lifted, offline has continued to do extremely well, showing that the consumer did not switch to go from offline to online. They still like the offline shopping experience. But equally, our online business continues to grow at a 79% CAGR over the last 3 years, and we continue to see the growth trajectory in e-com. So one of the reasons we see good numbers on the last few quarters is that we're seeing good traction on both channels happening together as opposed to one substituting the other. So we remain very confident that the e-commerce space will continue to grow, but equally excited about the offline business we're seeing.
So, just coming back to the overall industry, right? This Motilal Oswal report is very bullish on the sector. They say that organized players are growing at 1.5 times the rate of the overall market growth. Is that a fair assumption? And do you think that it could get better through the course of the next couple of years? I'm not talking about the immediate target, just trying to understand how the dynamics could change over the next 1 to 2 years.
So I think there's two forces driving that disproportionate growth into the organized sector. One, of course, is the fact that more high streets and malls are coming alive. More malls are being built today than before. There are more high streets coming alive that attracts organized retail. So that's one factor. The second factor is that through the pandemic, some of the businesses that got hurt disproportionately was also the unorganized retail sector. So that's number two. And the third force that we have driving people from unorganized to organized is the fact that as middle class incomes rise, so do aspirations. And as aspirations rise, people want to shop more often in an organized environment than an unorganized sector. So the choices are more, the availability is faster, and the desire is increasing. And I think all those three elements create a great tailwind for the movement of growth in the organized sector, overwhelming the growth in the unorganized sector.
Okay, well, thanks a lot for joining us, Mr. Joseph, and all the best with your store expansion plans. That's Metro Brands, up 5% almost now. They stick to their guidance of 260 store openings over the next 3 years. I won't forget the last time we chatted with him, you were quite shocked with the cost of a flip-flop, right? But that space is doing really well, and you can see it in the stock too. Let's slip into a quick break. The market is firing on all cylinders. So when we come back, Mitesh Thakkar will join in for some technical trades. Do stay tuned in.
Welcome back. Well, it's a very strong market. It's made a mincemeat of really those who shorted it. Looking at the US market or futures yesterday, just look at that, 225 points higher. And even if you bought at the gap up, you made something today. That's been the kind of the market that we have, especially on the bank Nifty. If you pull out that index once again, and today's Nifty Financial Services weekly options expiry. So who knows what the market has in it. It's been just very strong. Let's ask Mitesh if there are still some trades available at current levels. Mitesh, morning again, been a very strong first hour. Does this look like a bit of a trend day? And what would be your stock calls?
I think, we are right there at the level which I was thinking could be the area where the market could stop. Now, we had a gap down on Friday with Thursday's lows at around 17,861. And, if that gets taken out, then we are filling the gap. That should, I think, suggest that we should see momentum continuing and a retest of 18,060 could happen. Till then, I'm just, waiting it out. It's only about 10 odd points away from here. So, I think above that, you might see the market pick up more momentum and it could even expand on the upside. So, that's the kind of view I have. The stocks which I look at right now are Bharti Airtel. That's making a fresh high. That's a buy with a stop at about 780 for targets of 810. And GNFC, something, which has been negative. It's broken down yesterday and is kind of just marginally bouncing back on the upside today. But I think broadly the stock is showing signs of weakness. So around 700 sell with a stop at 709 for targets of around 675.
All right. Thanks a lot for that, Mitesh. Have a good day. Well, for now, let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in there. Manisha, what are you tracking today?
I'm looking at the cotton prices, Sonia, and there are some concerns here, even as the prices were going up or even as they're coming down. But as of now, we have seen a very sharp decline onto this one. We have seen prices come off by 35% from their 2022 highs. It's 12% down on a week-on-week basis and 20% down in the last 1 month itself. So this is the period that you have seen very sharp declines coming for the cotton prices there. When you look at the production, well, that is what the markets are anticipating is going to go higher. This is still the prices. We've seen a high of 51,600 rupees per bale, and currently we are just about holding 32,000 rupees. So that's the kind of decline that you have seen. It's not a good news for the farmers because they must have sown cotton understanding that they will get higher prices. So during the sowing, the prices were really high, but as of now, nearly 35 to 40% on the weaker side. Sowing in the meanwhile is up by nearly 7%. So when you look at the crop estimates itself, the Cotton Corporation of India is expecting the crop estimates 15% up at 360 lakh bales for the current season 2022-23. When it comes to Cotton Association of India, they're looking at slightly lower in sense of numbers at 350 lakh bales. Remember, last year was 315 lakh bales. So we are looking at a 15% higher crop when it comes to cotton this time around. As I said, the concerns really are about exports. When we were looking at higher prices, India was not competitive. And even as the cotton prices have come down, we still are 10% expensive in the international markets. Export numbers have been quite weak as well. So whether it's about yarn, where we were uncompetitive, the textile numbers, the garment exports, all of that has been down 70% as well. And I was talking to some industry experts. They say that much of the Diwali buying actually happens by the month of August, September. It is the retail buying that starts happening in October. So until the month of August, September as well, they're not looking at a lot of buying. And if there was Christmas orders to come as well, that would also start happening now for the garment and textile. That is not happening as well. So if you look at the last year, August and September, and this year, August and September, this year is nearly 50 to 60% on the weaker side when it comes to cotton and textile demand. That doesn't augur so well for that industry.
All right, Manisha, thank you very much for that. So cotton in focus on Manisha's radar this morning. Well, the market is doing absolutely great, 230 points, and we're at 17,855 on the index. We're also, by the way, we've also taken in one a really strong move, that downward sloping trend line on the index. I mean, that got taken out at open, and we are firmly above it now. We'll take a quick break here, and on the other side, our special segment, it's the economy follows. Lata will get chatting with Hitendra Dave of HSBC India on the upcoming FOMC meeting that starts today and its implications on the economy. Stay tuned for that conversation.